Okay, everyone, this will be the video for BMAR211, Study Unit 5, Chapter 7. In this lesson, we will deal with the service delivery process. So head on over to page 174 and follow along. You have 8 learning outcomes for this unit, and again, the page numbers are indicated on the slides as well as on iFundi. The first one, understand the nature of service interactions, explain the importance of the timing of service delivery, discuss the payment options as part of the service delivery process, understand the factors influencing customer channel choices, describe the different distribution channels that can be used by service providers, discuss franchising as a service delivery channel, explain how agents and brokers can be used in the service delivery process, and lastly, describe electronic channels and the use of electronic channels in service delivery. The last 3 learning outcomes deal with intermediaries in service delivery. Before we jump into the lesson, just a quote to go by. In order to succeed, your desire for success should be greater than your fear of failure. In the previous Zooms, we dealt with rather asking questions than staying quiet or being shy, because then you will struggle and you will get subpar marks. Whereas if you want to succeed, you will always ask questions. So I hope you can live by this and really push forward to complete your study successfully. On the next slide, you will see a video. This will be linked on iFundi. I will not play it in this video, but it really is an encouragement to do what you can't, or do what everyone tells you can't do, to push yourselves to the limits and to reach your dreams and make the best of the opportunities that you have. So make sure you watch that video just for a little bit of inspiration, because after watching this lesson, you will be halfway with the content for this module. So do what you can't. To introduce this unit a little bit, this is also on the iFundi page, but the service delivery process is a crucial element to any service provider, because you as a customer and your potential customers or current customers will evaluate you as a service provider on the manner in which it delivers its or your service. If it's a bad service, they will evaluate you poorly. If it's a great service, they will come back. Now, this custom evaluation of quality of the service will, for example, be significantly influenced by any delays in the service delivery process, the actions of staff, or anything that result in the expectations not being met. Take your studies as an example. If you contact a lecturer or you are trying to complete something but you struggle and there's no feedback, even though you are trying your best to get in touch, you will have a bad experience and it will not reflect good on the service provider, in this case NWU. In fact, custom evaluations of all 5 service quality dimensions, remember back to previous units, and as you can see on the slide, this will be influenced by the service delivery process. Now, to go back, assurance, meaning the knowledge, skill, and courtesy of employees, empathy in terms of caring and the degree to which customers receive individualized service from employees, reliability, the ability to perform a promised service dependably and accurately, responsiveness, the willingness of the provider to listen to the customer, and then lastly, tangibles, the physical facilities, equipment, and appearance of staff. Now, always remember those elements because it will always have an application in service delivery. Given the nature of services, that is, the simultaneous or at the same time production and consumption of a service, service delivery channels are typically shorter than those of physical products. Under certain yet limited circumstances, some service providers have the option to offer services through intermediaries or allow intermediaries to perform some of the service delivery functions on their behalf, and this we will get to later on. Moving on to learning outcome 1, which deals with the nature of service interactions, which you can find on page 174. Regardless of the manner in which service providers and customers interact, the contact during the service encounter forms the core of the service delivery process. This customer contact can be defined as the level of interaction that is required between the service provider and the customer in order to deliver the service, and we've touched on this a bit earlier in this module. Now, since the level of interaction required to deliver the service will have a direct influence on the where, how, and when the service can or should be delivered, service providers have to ensure that their service delivery process is appropriately adapted to the required level of interaction. If it's remote, we have to adapt. If it's in-person or contact sessions, we also have to adapt accordingly. So just a reminder of the definition of customer contact. Moving on to the 3 levels of contact in service delivery. This is quite straightforward, and I will briefly refer to the differences and an example. What are high contact services? For example, healthcare, hairdressing, counseling. Well, yes, you can get counseling via Zoom, for example, but that's not optimal. You want to do that in person. You want to be physically present with the other person. Due to pandemics, for example, that is a bit more challenging, but in general terms, healthcare, you cannot receive remote healthcare in terms of being treated for a COVID virus or anything like that. Hairdressing, that is the picture that you will see. You cannot get a haircut remotely. It's rather impossible unless you want to do the DIY and some a hairdresser is on the other side explaining what to do, and then yeah, well, that's not going to happen. So that is high contact services. The customer's presence is essential in the service delivery process when high contact services are offered. So essentially, you need to be in the presence of the person or organization delivering the service. Next, we have medium contact services. So if you take your car for a service to a dealership, you only drop it off and then you leave. So there's only limited contact with the service provider. Another example, and sometimes this might be confusing, if you order a product online, say you purchase new laptops or headphones, a tablet, a cell phone, doesn't matter. If you purchase that on Takealot, then if you are the person receiving the parcel from the courier, you still have more or less contact with the service organization. It's not entirely the one we will get to next, which is low contact service. So yes, internet banking, you can sit remotely, internet cafe at home, on your device, wherever you are, and you can pay someone, you can transfer, you can buy airtime, data, and so forth. It can also be applicable for online shopping. The thing where this comes into place is you don't have physical contact with a person. For example, a lot of companies that sell goods have a collection point, and then you indicate that you want your parcel to be delivered at a collection point because you're working odd hours and you can't have it delivered to your address. Then you go and you pick that up. So there's no contact with the service organization physically. Okay. So with medium, this requires the customer's presence for a specific part in the service delivery process. And with low contact, this is characterized by little to no physical contact between the customer and the service provider. So just know the difference between these 3 levels. Be able to read a case study and identify the specific one and then provide your motivation, and also be able to describe these different levels of contact. Next, we also need to refer to the service delivery contact types. This you can find on page 176. First, the customer visits the service provider. Okay, an example, if you couldn't get what is on this picture, it's actually a picture of Rockamama's. So you want to order food and you want to have the experience of going out with your friends, being waited on, and then you visit the service provider. Or if you take out a cell phone contract, you go to the store and then you sign up for a contract, you decide what you want, and then you visit the service provider physically. So depending on the scenario, if you visit the service provider, that's the first option you have. What you also need to consider as part of the first option, is that when the nature of the service delivery dictates that you as the customer, or if your customers are required to visit your service organization, or if you need to go to the service provider, there are 3 service delivery options that you need to consider. First of all, the delivery of the service at a single outlet, service delivery at multiple outlets, and then using intermediaries to deliver your service. Next, we have service providers visiting customers. Now, an easy example is a gardening service. You are home and you have a contracted garden service, and they come to your address to work on your garden and make it neat and so forth. So they have to visit you. If they don't visit you, you will not receive the service. Site location is of less importance when the service provider has to visit its customers to deliver a required service. This is only one example of where the service provider visits the customer. But then visiting the customer is often unavoidable, especially if inputs to the service delivery process are of such a nature that they cannot be easily moved. But then again, some services could be provided at a third-party location that is not at the service provider or the customer's address or premises. Examples of this: legal services, medical emergencies, or breakdown services. So if you are acquiring roadside assistance because your vehicle broke down, then the service provider needs to be called out and they have to visit the customer next to the road. The last one is delivering services at an arm's length. Now, services delivered at an arm's length refer to those services that are predominantly delivered by telecommunications and other forms of technology. Services delivered this way minimize the need to meet face to face to deliver the service. A typical example based on the scenario that we are in, we are providing this service of education to you at an arm's length. It is not in person. We don't visit your premises. You don't visit our premises. We are delivering this at an arm's length. So you always need to consider the scenario and then answer and motivate accordingly. You need to be able to understand the difference and to identify these based on a case study and describe them. There are also several considerations in the service delivery process. The service delivery process can be defined as all the operational functions that together produce the core service along with supporting services. But sometimes, although the core service is delivered by the service provider, supporting services can be performed by intermediaries. For example, Amazon.com. Yes, you can actually, in South Africa, you can order from them. I ordered some stuff at the beginning of February. I received it 2 weeks later, and they used DHL as a courier in South Africa to courier that directly to my doorstep. So you don't have to collect from the post office. For example, if you buy from Wish or sometimes eBay, you have to collect that at your local post office. But in case with Amazon, you can order from them from US and then it gets delivered with an intermediary in South Africa. Also have a look on page 177 and 78, as well as the original PPTX slides. You will see figure 7.1, which then provides an illustration of the core services and supporting services of an organization. I also, because this information is a bit limited so that you can understand or get a complete view of this concept, I linked several additional sources to external articles that you can also have a look at and read through to really understand this on Ifundi. To get to the second learning outcome, you have to consider the timing of service delivery, and you need to make sure you cover the entire section to understand all of the things that you need to consider in terms of timing. The decision that service providers make regarding the timing aspect of their service delivery will have a direct impact on the value of the service for customers, for example, available after hours. The duration of the service delivery could also be of value to customers, which could directly influence the pricing associated with the level of value required. If you think about a simple thing like a massage, you will pay significantly more for 1 hour service than for half an hour service. So the duration will have an impact on the value that you receive and the price that you pay. But then also, a customer may choose faster service delivery at a higher cost by using same-day delivery options of a courier instead of a 2-day delivery option. If you want to ship a parcel at the courier guy, you can pay expedited, so for example, overnight shipping, but you will pay about twice the amount. So the duration aspect of that will have an impact based on what you pay, and then also the value at the end of the day. In addition to the length of service delivery, service providers also have to consider how payment for services will take place, and this needs to be integrated into the service delivery process. As a service manager or owner of a business, you need to determine when in the delivery process payment will be required. So what you need to focus on in terms of the timing of service delivery, it's not covered in detail in this lesson. You have to go through the textbook information. The length of service delivery, this starts on page 197. This, in short, is the time length associated with the service delivery and can be determined by the actual service delivery process. For example, the time it takes to fly from Joburg to Cape Town, the amount of time you will spend at the spa, and so forth, how long you will wait for your parcel to arrive, all of those examples. And then service providers will sometimes have to base decisions regarding service offerings on the length of time it will take to deliver the service. Depending on what you decide in terms of that, it will have an impact on your operational resources, pricing of your services, and then your profitability at the end of the day. Also consider the permanence of service availability, and this refers to the times that the service will be available to customers and is typically determined by the operating hours of the service provider. Most restaurants will be open from, say, 9, 10, or 11 until 10 or 11 at night. but then you also get KFC, that's some of them are open 24/7. So as a service provider, you can make sure that you decide on the permanence. If you sell insurance or if you are an insurance company, you can decide to have a call center that's available 24/7. F&B, for example, if you have a certain level of account, you have private banking chats where you can send messages at 1 o'clock in the morning and you will still get responses and service from that bank. Payment considerations is part of the third learning outcome, and we will have a look at it next. The first example is payment before service delivery. If you plan to ship or post a parcel, it can be the post office, the courier guy, Postnet, anything like that. You need to pay before they ship the package or post the package. Next, it's payment after service delivery. So you've gone to the restaurant, you received your food, and then you pay the bill afterwards. That's just a quick example of that. But then also, if you went to the dentist or the doctor, it also gets deducted either from your medical aid or you have to pay the account after you have done your consultation. But then the third option, payment prior to and following service delivery. This is scenario dependent. So the example based on a specific case is Telkom, where if you have a set 24-month contract, you will usually pay the month before or whenever you decided to pay, but then that's in advance. Then that will be either payment before or after. But then it also happens based on the specific scenario. You have a cell phone and you pay your monthly fee. So that's you pay that prior to, but then now you need additional data, you need airtime, you need SMS bundles, and that will be following service delivery. So you already have your product from Telkom, but now you need additional stuff, and then that gets added on after you already paid for your contract. So scenario dependent, it can be either of these three. Make sure you are able to identify and describe these, as well as consider a case study and identify and motivate practically. The fourth learning outcome deals with customer channel preferences, and there are 4 key drivers that determine the selection among different service delivery channels. The first one, customers rely more on personal channels when buying complex services characterized by a high degree of risk during the delivery process. If you are spending 200,000 Rand, 150,000 Rand, 100,000 Rand on a car, a million on a house, then you want to use a personal channel. You don't want to just look at a house, pay for it, and then hope everything works out. You need to use a personal channel to view the house, test drive the car, because this is kind of complex. Also, seeing a lawyer, counseling, and anything like that, one would prefer a personal channel in this situation. Next is where customers who are more knowledgeable about the service or delivery channel would be more confident using self-service and electronic channels. If it's only like $400, yes, you can just transfer the money or you can pay the money. But if it's a 15,000 down payment and you are sure you know how to do it and where the money is going, then you are definitely confident in using self-service. But then if you are not, you will revert back to option 1 where you prefer a personal channel. The channel preferences in this case would be, first of all, personal channels. So you need to consider a scenario and based on the scenario and the information, advise which channel will be more preferable. For example, a personal. The second one is self-service and electronic. A third one is where customers with strong social needs may prefer personal contact and those concerned with instrumental aspects a non-personal channel. So this will be a pensioner visiting a travel agency as an example. So if this pensioner is living alone and they might want to insist on visiting the local travel agent rather on using the travel agent services himself over the internet. So you have to consider the scenario again. If it's a young individual, they don't have social needs, they can use self-service and book online. But if it's an older person, a person with social needs, they would prefer a personal channel. Lastly, customers with a strong need for convenience typically prefer self-service and electronic service delivery channels to traditional channels. Consider the first example, mobile versus landlines. With mobile, you can drive in your car, you can move about, and you can use your device. With landlines, you are literally fixed to a line and you cannot move, and sometimes reception isn't that great, and then you have difficulty hearing, especially with all the devices. Think about when it is the end of the month and you drive to town and you see all of the long queues next to banks. So if you have a strong need for convenience, you would rather do all of your banking and payments online. That will be the channel preferences. So depending on the scenario, you can decide between a personal channel, self-service or electronic channels, and then non-personal channels, or then self-service and electronic service delivery channels. Okay, let's move on to learning outcome 5. And this will deal with the distribution of the service. Have a look on page 183 and you will see figure 7.2, which then details the service delivery channel options. For a product, it will be typically 5 channels that you should have learned in your first year, where it will be, for example, manufacturer, wholesaler, retailer, customer, manufacturer, retailer, customer, or manufacturer to customer, different distribution channels for that product. But in terms of service delivery channel options, you will see on top, and we just refer to core services and supporting services, where for supporting services you have the service organization, an electronic channel, the franchise, the agent or the brokers. These are intermediaries. And then where you move to the entire service delivery from the customer's perspective. A franchise and a service organization themselves, they will provide their core services and then also directly to the customer. What you need to know in terms of distribution of the service is the intensity of distribution. So the 3 types of intensity in terms of distribution. The first one is exclusive distribution, and this refers to the use of a limited number of intermediaries to only offer one branded service. All of these are scenario specific, but the example there, if Gucci has a Gucci store and that's the only place you can buy Gucci products, then that is exclusive distribution. Or if it's the Gucci outlet and the online store and one other intermediary, then it's still exclusive. With selective distribution, it refers to a limited number of intermediaries to provide services to its customers. This might be a product base, but remember with every product there is a service element. So the picture that you will see is that of the Samsung Flip. And although the textbook indicates that with cell phone devices it is intensive distribution, yes, it's true because you can buy a cell phone basically at a convenience store these days, but it depends on the scenario. You cannot buy the Samsung Flip, for example, at Macro, even though they have cell phones on display and available for purchase. So again, it is scenario specific. So in terms of the Samsung Flip, you cannot get that product or the after-sale service at any odd store. They only use selective distribution, for example, intermediaries like Vodacom, Telkom, MTN, and a few others. With intensive distribution, this is the easiest and the most common one. Service providers will attempt to make their services available as widely as possible. If we take the example on the screen, Pepsi, yes, it's a physical product. That's just an easy way to explain the concept. You can get it almost in every shop. Even a backyard cafe will sell a Coke or a Pepsi. In terms of an example for services, something that's not tangible like airtime, also your backyard tuck shop also might sell that little airtime bundles that you can buy. So that is available intensively and everywhere. Basically, for this learning outcome, know the differences between these intensity of distribution, regard a case study and identify the particular one, and motivate your answer by applying it to the case study and scenario. Then learning outcome 6 to 8, as I mentioned with the introduction, all of them are part of the intermediaries used in service delivery processes. And for this lesson, I will only briefly touch on the differences. You have to go back to the textbook or the internet to see more detail about these types of intermediaries. The first one is franchising. This is the most common example that we can think of. KFC, McDonald's, Hungry Lion, Chicken Licker, Nando's. These are all types of franchises or examples of franchises. But then also note the franchisor and the franchisee. By offering a service via franchises, service providers, for example, the franchisor, this is the main concept of, for example, McDonald's, offer intermediaries called franchisees. These are the individual franchises or the persons that have a franchise, the opportunity to use their brand name, business process, services, or reputation to offer services to customers in exchange for an agreed fee or royalty. Do not forget to go to the textbook and find the advantages and disadvantages. You have several, and you also need to make sure you know the difference between the advantages and disadvantages for a franchisor and the advantages and disadvantages for a franchisee. For a franchisor, the advantage can be expanded operations and increased revenue, shared risk, the knowledge of local markets, and then also the disadvantages can be inconsistent quality, loss of control, relationship with customers are controlled by the franchisee and not the franchisor, and also legal disputes. From the franchisee's perspective, this is the individual owner of a random McDonald's in Vanderbijl Park, Potchefstroom, and so forth. The advantage can be its national marketing. If there's a nationwide advertisement for a McDonald's deal, you didn't pay for the ad, so you get automatic free marketing. Running an established business. It's a lot easier to run an established business like a franchise, like McDonald's, than it is to open something that is only on its own and needs to rely on its own reputation. There's also that thing of reduced risk. The disadvantages, though, is encroachment, and this occurs when the franchisor allows the opening of new outlets. In Sasolburg, for example, in the Vol Triangle, there is a KFC in town, and then instead of opening something like a McDonald's, which we don't have, they opened another KFC, and that has taken a lot of the customers away from town. There's also lower profit margins and revenue because the franchise determines the price and not the franchisee, and then high fees and royalties. You are legally bound to pay these fees and royalties, and this takes a lot of your profit margin away. Next, we refer to agents or brokers. This is learning outcome 7. An agent is an intermediary who acts on behalf of either their service provider or a customer and has the necessary authority to formalize agreements between the service provider and the customer. So think about realty, a purchasing and selling agent. You have an estate agent and you want to sell your house, and they deal with the entire process, and they are legally able to sell your house and have the deed transferred to the new owner. A broker, on the other hand, these are intermediaries who bring sellers and buyers together and assist in negotiations. So insurance brokers, medical aid brokers, and so forth. For the last learning outcome, electronic channels, and this is obviously the fourth industrial revolution that we are living in currently, and it's progressing on a daily basis. So this will be a main emphasis in terms of completing the activities, because in future this is most likely where you will be when you are done with your studies and start your jobs. Banking services are probably the best example of how electronic channels have changed service delivery by introducing self-service. You no longer have to stand in those long queues. You can download the bank's app. Most banks have an app, and you can do your banking on the electronic channel, which is then your device. There are 4 main types of electronic channels, and this is service machines, telephone, internet, and mobile channels. Have a look at specific detail on this on page 189 and be able to read through a case study and know which one we are talking about. These are the main intermediaries considered for this unit specifically and in this chapter. Just make sure you know the difference and be able to identify them. Go through a case study and know whether it's an agent, a broker, electronic channels, and franchises. And not to forget, you need to consider the advantages and disadvantages of all 3 main types of intermediaries. That brings us to the end of this very short unit. Just remember to refer to the detailed information in the textbook as well as the additional sources that we shared on the Fundi page. This will only broaden and deepen your knowledge on these topics, and then also maybe give you a more practical side based on these theoretical concepts. Again, if you have any questions based on this content, if anything is unclear, please make sure to contact your lecturer.